So welcome to our update from 10 Forward this week. It's been a long time, hasn't it, since the last one? And a lot has happened over that period of time, over those few months. So first and foremost, we hope that you're doing well. I know that from speaking with a lot of you, you've had some real challenges and issues to deal with, but it sounds like you've managed to work your way through them. So we hope that that can continue. So this week, we're just going to talk about some of the changes to some of the government assistance programs, particularly the Furlough Scheme. I know that's something that a lot of you have been asking about. But firstly, what's been happening with us here at 10 Forward over the last few months? Well, the office is still very much empty. Our staff are still working from home. There's probably about 3 or 4 of us at any one time now that are in the office. But we took the view back in August. We took quite a long-term perspective on this and decided that we wouldn't make any decision on people returning to the office until the new year, 2021. However, in the meantime, we've made it so that if people do want to come back, they can, and also if visitors want to come and visit, our team has been working really hard to make the place safe and ready for that. So the sorts of things that we all now probably take for granted, that we see quite often, the hand sanitizers, the spacings, the signage, the face masks, all of those things, we've made provision and got the place ready. I know that a few of you have been asking us about any guidance we have on office spaces and preparing them and employees coming back to work. So please get in touch if you need that. One quick thing I can say is that if you do have an office space, you are supposed to do a health and safety risk assessment before your staff come back. So, onto the Furlough Scheme. That's the most significant change, and obviously that was announced earlier. So what's happened with that? So the current scheme, as we know, that ends at the end of this month, 31st of October. And under that scheme, it's been gradually reducing the amounts that you can claim. It's currently at 60% for October, up to a maximum of 1,875. So that ends at the end of October. There was this bonus payment that is still in place that they announced. So if you have employees that were furloughed and they are still on your books, are still on your payroll by the end of January, then you can receive a £1,000 bonus payment. So that's important to remember. How it's going to work and how you claim that, the government have said that they'll release some information on that soon. So the new furlough scheme, the new retention scheme, starts from the 1st of November and runs until the 30th of April 2021. Now, who's eligible for it? Well, first of all, you don't need to have claimed under the previous scheme to be eligible. That's the first thing. Clearly, you need to operate a UK company with a UK bank account. All of those standard things still apply. Your staff, if you're going to claim for a particular employee, they need to have been on PAYE on or before the 23rd of September. So that is one very clear criteria. To qualify for the support, an employee must have worked at least 33% of their contracted hours during that claim period. So that's something to keep in mind. Also, unlike previous scheme, the grant won't cover employees' NIC or pension payments. So how does it work? So the companies need to employers pay their employees in full for the hours they do work during the claim period. For the hours that they don't work, the employer will then pay an additional 1/3 of that amount, and the government will pay a further third. And then the final third, effectively the employee is taking a wage or a salary cut. The level of the grant will be based on the employee's usual salary, with the calculation for usual wages or salaries being the same as it was under the previous job retention scheme, and it's capped at 697.92 per month. The employee can't be on notice of redundancy, so that's one clear thing they've also said. The employers will be able to make the claim through the government website, but the claim will always be in arrears. That's something you need to be aware of in terms of working out your cash flow for that. So in a nutshell, if, for example, you've got an employee that's worked 33% of their normal hours, they would receive 77% of their pay, with 55% of that being funded by the employer and 22% being funded by the government. So that's essentially how it works. That's a new scheme, and it can work in conjunction with that bonus payment that we mentioned earlier, so that's important to keep in mind. So changes to the other government schemes, what's happened with those? Well, looking at bounce back loans and CBILS, both of those have been extended. The repayment period has been extended from 6 years to 10 years. You can opt to take advantage of that. With bounce back loans, you can opt for interest-free periods. You can take them in chunks of 6 months. You can opt for payment holidays as well. Just need to get in touch with your provider to see how that works and how you apply for those things. In terms of CBILS, so if you remember, the application period previously was going to close on the 30th of September. They've extended that now to the end of November. As you mentioned, similar to the bounce back loans, you can extend your repayment period from 6 to 10 years. But one thing they have said is that they're going to introduce a new loan scheme in January. So we'll wait to hear how that works and what that will look like. For the self-employment income support scheme, they've announced that there's going to be 2 further rounds of grants. What the second one looks like in terms of the period it covers and the amount, we don't know yet. We'll find that out soon. The first one covers a period from November to January, that 3-month period. And effectively the way it works is a lot less than the previous grant amounts. It's 20% of your average monthly profits, and it's capped for the 3 months at 1,875. You don't need to have claimed under the previous schemes to be eligible for this, so just keep that in mind. In terms of meeting liabilities for VAT, if you remember, one of the original things they provided for was that if you had liabilities between March and June, they could be extended out to March 2021. They've now said that you can apply for a further extension to March 2022. However, there are significant criteria and eligibility around this, so please get in touch with us if you want to find out about those. For paying off self-assessment liabilities, if you remember, they postponed payments on account until wrapping up all of the liabilities in the January 2021 deadline. They've now said that if your liabilities are on or below 30,000, you will be able to apply to have that extended out to January 2022. Again, plenty of criteria that apply, so please get in touch with us to find out a bit more about that. So that is the end of our update. I hope that covers a few things and I hope that's been informative. If you have any questions, please do get in touch. And thank you very much for listening. Hopefully you won't need to wait too long until the next one, the next update. But in the meantime, have a great weekend.